You are listening to ChartingWealth.com for Thursday, the 6th of October, 2016. The market overall up for the day, still in a downtrend. Let's jump right into the middle of what's going on. As we look at our two-day chart, we had a candle wrap up at the close of the day on October the 5th. That was Wednesday. It is pretty much a hammer. What we have is we have a long wick on the bottom, a red box, a thin red box with a little bit of a wick on top. What that shows us is the bears were able to pull the market way, way down. The bulls were able to push it up, still closed in a negative on that two-day candle. The market's really been sliding sideways now for 6 days after a big drop on the 27th, the candle that closed on the 27th of September. So we're sliding sideways. We closed just below the two-day trend line and just above the weekly trend line. We're still angling down on our MACD. Our blue MACD line is still heading down, as is the signal line. We are getting ready, it looks like, for the derivative oscillator to pop over going up. It's been losing its downward momentum since the 21st, since the candle that closed on the 21st of September, with that big move on the candles on the 21st and the 23rd, those two-day candles over that 4-day period. Then the market was down hard on the 27th of September and has really just been going sideways since then. Now let's look intraday and see what we see. Intraday, we see up move in the morning and in the afternoon on Wednesday. Derivative oscillator still in the negative, as is the 4-hour chart. So our 4-hour MACD is still negative. We did have a huge down afternoon on Tuesday, the 4th. So again, we're still down on all three of our charts. We are down on the weekly, we're down on the 2-day, and we're down on the 4-hour on IYY, which is, of course, the iShares Dow Jones U.S. Total Market Index Fund. Now, let's quickly go to the S&P 500 as shown to us by SPY, up 0.46%. The candle, our Heiken Ashi candlestick, looks very similar. Again, a small red closed box, long wick on the bottom, wick on the top also, getting closer and closer on the 2-day chart to crossing over on the derivative oscillator. MACD is pretty much running sideways at this point, so it looks like it's getting ready to change direction, but it hasn't yet, so we don't call that and we do not guess, my friends. Let's talk about what's going on the 4-hour chart. It did close above the 2-day trend line, and it is also above the weekly trend line, but still hasn't crossed over on the MACD, nor has the derivative oscillator. So again, sliding sideways. So again, if you are in a down move on the S&P 500, nothing's told you to come out of that yet. So watch. You may be getting yourself out quickly over the course of the day on Thursday, but we haven't had a crossover yet on any of those charts. Going to go back to the 2-day chart, and then we're going to go to the Qs. What's going on in the Qs? That's the NASDAQ 100. Remember, it's still in a confirmed up move on the weekly chart. We're getting closer and closer to a crossover going up on the MACD. It hasn't happened yet on the 2-day chart. Derivative oscillator did flip over, and of course, we are well above the 2-day uptrend line. We can look at the 4-hour chart and the 2-day chart, and it has been going up 1, 2, 3, 4, 5, 6, 7 candles representing about 14 days. We had one down candle for a 2-day period on the 27th of September, but again, strong up movement, but we still don't have a crossover on the MACD. Very, very odd, showing you there might not be a lot of legs to that up movement. If you look at the up movement that occurred on the 23rd of September, it's just now been matched again after movement down on the 27th and then trying to finally catch up since then on the 29th of September, the 3rd of October, and the 5th of October. So we do have a confirmed crossover, at least on the derivative oscillator, but not yet on the MACD, and the MACD is our main signal line. Let's look at what's going on the 4-hour chart. 4-hour chart had crossed over going down back on the 3rd of October and then popped up in the morning of the 4th, down the afternoon of the 4th of October, popped up the morning and afternoon of the 5th of October. So again, just waiting to see. We still don't even have, though, the 4-hour chart crossing over on the MACD going up, although derivative oscillator has. So some schizophrenia there with the Qs. Makes it dangerous to try to trade that. Okay, lastly, going to go to gold. Gold, for the record, the Qs was up 0.36% for the day. Gold down 0.16% for the day. And of course, those of you who jumped into gold have seen gold treating you righteously if you were jumped in for that inverse down move, shorting gold. It has done quite well for you. Gold's been a confirmed down move on our 2-day chart all the way back to the 8th of August. And some sideways movement, little bumps up here and there throughout the course of that time, but overall down. If we look at the 4-hour chart, which has been our trading and calling chart in gold, man, if you'd been following that, you have done so well. If you got in any time on the morning of the 28th, or even the afternoon of the 28th, or even the next day, you've continued to see gold sink in an inverse fund. You have been doing well. The high that first day, 126.89. The low, 125.73. Where did gold close? It closed at 120.77. Let me tell you, $7 or so of movement in an inverse fund means it went up that much. Not a bad return since the 27th of September. Pretty good, darn good return. Gold could be bottoming out. It's been hitting around the same point, around a 120.74. So again, if you've made $7, take it, take it, take it, or at least take some of it, and call yourself a genius, because that has worked out great. I love our 4-hour chart. You can backtrack that and see how accurate and well it has done for us over the last many months since it stopped working at the end of the year in 2015 and then started after the beginning of the year of 2016. Very, very, very happy with that. If you don't know what I'm talking about when I say inverse funds, please go listen to our training at Charting Wealth, the website, or at the YouTube channel, or at iTunes. It is entitled Inverse Funds, How to Make Money When Markets Crash. It is something you've got to get hold of, listen to. It's all for free, of course. Again, we're not telling you how to trade. We are not a stock calling service. We're an education firm. We want you to open a virtual account at any of the online brokers and start practicing. Once you get good, you can make your own calls with your own money. We don't make calls for you. We want you to learn how to read these charts. Why? Because they are your roadmap to riches. If you can read a stock chart, my friends, you can print gold. You're like Rumpelstiltskin. You can spin straw into gold. But you got to practice this 10 minutes a day. We ask you, go to our website, sign up for our newsletter. We'll send you, with that newsletter, you'll get every day the link to our How to Read a Stock Chart video. It's 15 minutes of what you need to get started for free. In addition, you'll get the layout that we use at freestockcharts.com, how to access that for free. And you will also get our daily market worksheet that we ask you to fill out every day. And there's a great training online we put on last week about how to use that, where I actually use a daily market worksheet I filled out to show you how I did it from the charts and from the review we give you every day. You can use that 10 minutes to do that too. We appreciate you. Thank you so much for being with us. You have questions, problems, concerns, let us hear from you. Go to iTunes, give us a 5-star rating, say something nice about us. Same at YouTube. Go there and subscribe to our channel. God bless. Take care from chartingwealth.com.